How long does it take to become financially independent? Well, the answer depends on one number, namely your savings rate. In this video, you will learn how your personal savings rate will determine when you will reach financial independence. Welcome to Money with Markus, where I help you reach financial independence by earning more, saving more, and investing more money. My name is Markus Seppälä. In this video, I'm going to explain the concept of the savings rate. I'm going to illustrate it in a simple table, and then I'm going to show you how your income is actually not the most important factor when it comes to determining how long it will take you to become financially independent. There's links to everything I'm talking about in the description below. There you can also pick up my free financial independence spreadsheet. It's going to help plan your journey towards financial freedom. Let's start our discussion about savings rate by looking at a simple example. Let's assume that you're making $100,000 per year. Your expenses are $60,000 and you're able to save $40,000 per year. That means that your personal savings rate is 40% because $40,000 is 40% out of $100,000. With these data, we can calculate how much money you will need to be financially independent, and it all relates to your expenses or your spending. The formula is that you take your spending multiplied by 25. So 60,000 multiplied by 25 is actually 1.5 million. So you are financially independent under these conditions if you have 1.5 million in your stock portfolio. If you want to learn more about exactly how to calculate your FINE number, I have a separate video about that. I have a link in the description below. And now let's look at how long is it going to take you to reach that 1.5 million FINE number. The calculation for that is the 1.5 million divided by your annual savings, which is 40,000. And 1.5 million divided by 40,000 is 37 and a half years. So in this example, it's going to take you 37 and a half years to become financially independent. But let's say that we increase that savings rate from 40% to 60%. Let's see what happens in this case. At this time, your spend every year or your expenses is going to be 40,000. That multiplied by 25 will give you $1 million. So $1 million is your FINE number, the amount that you need to be financially independent. Now, how long is it going to take you to reach that $1 million portfolio? Well, this relates to your savings once again. And for this calculation, we do 1 million divided by 60,000. And the answer here is 16.7 years. So you can see here that by bumping up that savings rate from 40% to 60%, you are eliminating 20 years worth of work and saving on your journey to financial independence. I think 37 and a half years is not really an attractive time frame because that's basically a normal career, but 16.7 years, that is a pretty interesting opportunity, I think. We're just getting started, but if you already got value, hit the like button. Of course, you may want to look at other savings rates as well and how they impact your time to financial independence. The table on the screen shows all the calculations from a savings rate of 0% to 100% and how long that's going to take you to become financially independent. This table is one of the parts in that spreadsheet, that financial independence spreadsheet that I mentioned before. You can download it from the link below. Let me highlight two of the rows in that table because they represent the extremes. If you have a savings rate of 0%, then you will definitely never become financially independent because you're not saving any money. But if you have a savings rate of 100%, that means that you actually don't have any expenses. You're not spending any money. And that means that you are financially independent today. And I don't really know any good examples when this could be the case. Maybe you're living in the forest, maybe you're living off the land, maybe you're living in a monastery where you actually have no expenses. But perhaps that example with the monastery is actually not a good one because you're still dependent on other people covering your expenses, so you're not exactly financially independent. But the table does highlight some interesting effects at the extremes based on the savings rate. In just a moment, I'm going to jump over to the point that I mentioned before, that your income actually doesn't matter so much. But if you got some value from this video, please consider subscribing to my channel for more tips on how you can reach financial freedom. And here is the example highlighting the role of your income and the importance of your savings rate. In these examples, I'm going to use the same savings rate, which is 60%. If you have an income of not 100,000, but if you only have 50,000 in income and you're still able to save 60%, that means that you're able to save 30,000 per year and only spend 20,000 per year. Your FI number, depending on your spending, is going to be 20,000 multiplied by 25, which is 500,000. And how long is it going to take you to reach 500,000? Well, that's 500,000 divided by 30,000, which once again is 16.7 years, exactly the same as we saw before. But let's say that your income instead is 200,000 with that same 60% savings rate. Well, you're going to save 120,000 and you're going to spend 80,000. Your FI number, once again, is your spending multiplied by 25, which in this case is 2 million. So you need 2 million to become financially independent. How long is it going to take? Take that 2 million divided by your annual savings, which is 120,000. Once again, the answer is 16.7 years. So the point that I want to make here, that is that your absolute level of income is not the most important factor in determining how long it will take you to become financially independent. The number one factor determining this is your savings rate. So here's my question to you. Which do you think is more important to work on? Increasing your income or decreasing your expenses? Let me know in the comments. There is a strategy which combines both elements in this calculation, and it's called geographic arbitrage. The basic idea is to earn your money in a high-income country and spend your money in a low-cost country. If you want some creative ideas on what you can do with geoarbitrage, click the video on the screen now. Also remember to grab my free financial independence spreadsheet. You can get it from the links below. Thank you for watching. I will see you in the next video.